Why is the stock market ripping higher on a day right after the election when we haven't even decided who the next president is going to be? That's what I'm going to be talking about in this video. Over the last week or so, I've had a handful of people reaching out to me down in the comment section saying, "Hey Matt, you understand the stock market, you understand the financial market. Will you explain why this thing continues to move higher and higher?" I thought today would be a great day to talk about that because as of this recording, the market is up multiple percent and we haven't even named the new president as of this recording. So let's get right into it and talk about it. But hey everybody, my name is Matt. Welcome back. If you're new here, welcome to the channel. Thanks so much for checking me out. Please be sure to hit the subscribe button down below. And if you're returning, thanks so much for being here once again. So great to see you. I hope you enjoy this video. But let's get right into it and talk about the market. Why is it ripping higher? Right before I recorded, I looked at the market really quickly just to see what's going on. The Dow is up almost 3%. The S&P is up about 3.33%. The NASDAQ is up over 5%. Why? Why today when we don't even know who the president is going to be? Well, let's break it down really quickly and I'm going to explain really simply what moves the market. So you probably already know this, but hang with me for just like 30 seconds. The market is driven by supply and demand, just like every other market, right? So when there's an abundance of demand and very little supply, prices must go higher. If there's a ton of supply and very little demand, prices must go down, right? I mean, it's just like any market. You could pick a market of fish. You could talk about bubblegum wrappers. You can talk about stocks. You can talk about shoes. It doesn't matter what it is. This is how every single market moves, supply and demand. However, there's something we call catalysts that moves price between pockets of supply and pockets of demand. So in this event, there is a catalyst, otherwise known as a news event. Catalysts simply just move price to where it was going to go anyway. So the catalyst today, and now I'm not taking any political sides, but this is what we're anticipating. So prior to the election, there was this fear that potentially there could be a blue wave, as in Democrats would take the House, the Senate, and the presidency. Well, many investors who invest in the stock market would look at a blue wave as, oh my gosh, taxes are going to go through the roof, sell everything now while capital gains rates are still low, and then I can always jump back in later afterward. So they took a defensive approach and just started selling some things last week before the election, just as out of fear, like, hey, if there is actually a blue wave, it could mean my taxes are going to go up significantly. In fact, there was a proposal that the capital gains rate would go from roughly 23% up to over 44%. That's a massive increase in the capital gains rate. So as investors, those people who would be paying those capital gains rates, they'd be thinking, that's a massive increase in my taxes. Let's take my profits now and worry about that 23% capital gains rate versus the potential 44% that could be coming. Well, now, as of today, we know that there's not going to be a blue sweep anymore, simply because the Republicans are going to maintain control of the Senate. So it doesn't matter who the president's going to be. Of course, we don't know who that's going to be right now, but there's not going to be any massive increases in taxes that we know of, simply because it's not going to go through the Republican-held or Republican-controlled Senate. It's just not going to happen. They're not going to allow that to happen. So a lot of investors are looking at this as, okay, all bets off as far as massive tax increases, so let's get back into the market. And as you can see in the market today, it is ripping higher by multiple percents. In fact, tech, like big tech, is going much, much higher. Like I said, the NASDAQ, as represented by those big tech stocks, is up by about 5% as of this recording, which is massive. So that explains why the market is possibly going higher right now. Again, once that new president is announced, of course, we're probably going to see a lot more volatility within the market, not only through the rest of today, but probably through the rest of the week and potentially even through the rest of the year. We could be seeing quite a bit more volatility. So just be safe. Of course, I didn't say this at the beginning, but I want to say it now, which is, this is not financial advice. It's not investing advice. It is not advice in any possible way. This is just me giving my opinion on the stock market because I've been watching it very closely every single day for roughly 12 years. So I kind of know a little bit about the stock market. Of course, I'm not an expert, not at all. So don't take my advice, but I have been watching the markets very closely for over 12 years now, and you see patterns play out time and time again. You see this stuff happen every single time. You know what's going to happen. You don't know what's going to happen, but you get a pretty good idea of what's going to happen with a pretty high degree of accuracy just based on the patterns that you see in the market. So anyway, there is one thing that I see in the market right now that is a little bit concerning to me, and that's what I want to talk about here for just a minute. So if you're someone who's been watching the market for any length of time, I hope you're watching the four main indices, which are the Dow as represented by the ETF DIA, the S&P 500 as represented by the ETF SPY, the NASDAQ 100 as represented by the QQQ ETF, and as well the Russell 2000, which unfortunately I don't think many people watch, the Russell 2000 as represented by the ETF IWM. I watch those four. Whether you trade them or not, you should be watching them. The reason is sometimes you get divergence between these, and it's a little bit alarming because, let's just say it how it is. The Dow, let's be honest. Who really cares about the Dow? The Dow is it's not very influential at all. It's only made up of 30 stocks. It doesn't really matter. The S&P, you should definitely be watching that. The NASDAQ and the Russell, you should definitely be watching all those. The reason I bring this up, as of this recording, the Dow is up about 2.75%. The S&P 500 is up about 3.34%. The NASDAQ 100, it's up about 5%. Here's the kicker. The Russell 2000 is only up 1%. Why do I say that? You want to watch small caps, otherwise known as the Russell 2000 as represented by the IWM. A lot of times that leads the market. It is significantly underperforming the market today. The Russell 2000, actually earlier this morning, I don't know what was going on, but either way, it doesn't really matter. The market all of a sudden started to go down a little bit. It shaved off like 1.5% from its highs at the moment. Well, the Russell went negative by like 0.2%. I was seeing that as a tell, right? Check out the Russell 2000. Watch the IWM. Watch all four of these. Typically, the Russell, I like to look at these four as like a family of four. The Dow is represented as the dad. He's slow. He doesn't move fast at all. That's kind of the dad. The mom is the S&P 500. She moves a little bit more quickly, but you still want to keep an eye on her. And she's still influential. The NASDAQ 100 is like the oldest child. It kind of takes off on its own sometimes, and it's a little bit crazy and erratic. You want to watch that one for sure. But the one you really want to watch is the youngest child, the IWM or Russell 2000. That thing, all of a sudden, out of nowhere, takes off, possibly going in the same direction or the opposite direction. No matter what it's doing, you want to keep an eye on it, because if it goes in the opposite direction, it's only a matter of time with that divergence before the rest of the family follows the IWM. So I've been watching this for many, many years, 12 years now. I've been watching this stuff, and you see it time and time again. When the IWM underperforms, keep an eye on it, because if that thing rolls over, watch the other ones, because they're probably going to follow along. So anyway, again, not financial advice, not investing advice, just a little bit of insight from a guy that watches this stuff on a daily basis. I spend literally hours every day watching the market, but just some patterns that I've been checking out. So anyway, if you like this, please leave a comment down below, or you hit the like button for sure if you like this. Otherwise, I'll continue to keep you updated with everything going on as far as the elections, the stimulus checks, Social Security, SSI, you name it. I'm here for you. I'm your advocate on a daily basis. Enjoy your day, and I'm sure I will see you again this afternoon.